Are you thinking about buying a house in Tucson, Phoenix, or Northern Arizona? Don't make the biggest financial decision of your life without watching the rest of this video. Today we're breaking down mortgage interest rates, what's going on in the market, and we're looking at one of the best buyer's market that we've seen in years. Today I'm here with Rolando Diaz from Mutual of Omaha, our mortgage partner, and we're going to be breaking down why now is a great time to buy a house, and it's not all just about interest rates. Seller concessions, negotiations by your agents, and partnering with a great mortgage loan officer. Watch this video, and we're going to break it all down for you right here. Hey, Rolando, I know a lot of people think that they can't buy a house because either I don't have enough cash, interest rates are too high, or I don't have enough assistance to get into the house and get going. So what are some of the programs that you guys offer? Maybe let's start with first-time home buyers. Somebody that's thinking about wanting to buy a house, but either their credit score isn't high enough or they don't have enough down payment money. What solutions do you guys provide that help somebody get through that door?
Sure, yeah. One of the things that we take great pride in at Mutual of Omaha is our down payment assistance program. It's an in-house program, and really the reason it stands out versus others, Pete, is the fact that we're a little bit more lenient on credit scores, debt to income ratios, and you know, most programs out there are phenomenal and they do a good job, your local government programs or state programs, but you know, the majority of them have pretty tight restrictions on credit scores, which would be around 640, most of them 660. Ours will go down as low as 600.
Okay.
It's very lenient on income restrictions.
Okay.
So a lot of the programs out there very tight on income limits. First-time home buyer is a requirement, right? For the down payment assistance programs out there. With our in-house program, you do not have to be a first-time home buyer.
And I think that's a big one because a lot of people don't know that, right?
Right.
So they hear, you know, down payment assistance program, well, I've already owned a home in the past,
right,
so I can't qualify. But with you guys, that's not the case.
Correct. And so that's something that we take great pride in with our program. The fact that we can go down to a 600 FICO score, that provides a lot of flexibility for first-time home buyers out there. I mean, life happens, you know, we all know it, right?
Yep.
We have hiccups in life, whether it be, you know, a life-changing event, a divorce, whatever it may be, but, you know, we understand that. And so our program, you know, offers a solution for that. And we can go down as low as 600 as far as financing for a down payment assistance program.
Fantastic. So, you know, one of the things I think when people talk about buying homes, everybody gets caught up on interest rate. You know, interest rate, right? And you and I were talking before we were filming, you know, that the changes in the economy, that yesterday the report came out around inflation, and it was a good report there, and oil prices are...
Yeah, getting back to pre-war levels, right? Before all the geopolitical stuff started happening at the end of February.
Yep. Things
are looking pretty positive now.
Solid.
So yeah, I mean, things are looking pretty good.
And I think one of the things that doesn't get brought up enough is that, you know, if I'm a home buyer and I'm thinking about buying, first of all, the total number of homes back available on the market compared to, you know, post-COVID, you know, like in the Tucson market, there was less than 1,000 homes available to buy across every price range, right?
Right.
You know, now we're over 5,000. So now we got options.
Right.
And so what does that mean for a buyer coming into the market having additional inventory like that?
Yeah, you know, I tell my buyers and anyone that is potentially thinking of buying, right, especially first-time home buyers, this really is, you know, in the last probably 3 to 5 years, the sweetest spot for home buyers. And the reason for that, you know, you look at the Phoenix market, 65% of transactions through May of 2026, 65% of transactions had seller concessions involved in the transaction, right? You know, those seller concessions, what it means to a buyer is making the purchase more affordable, right? It can reduce their closing costs, it can cover that. One of the great things with our in-house down payment assistance program is you can still buy down the rate, right? If you're not going with the down payment assistance program, you know, Mutual offers a 3-1 buy down, a 2-1 buy down. With our 3-1 buy down, 2-1 buy down, it also means that it can save a buyer potentially $10,000 to $12,000 those first 2 to 3 years when it comes to savings on their monthly payment by reducing the rate. Yeah.
Yeah, it's huge. You know, I think let's go back to seller concessions for a minute, because I don't know that a lot of people understand the benefits of having that. You and I were talking yesterday. Out of the last 10 loans that you've closed for our team, how many of those deals had seller concessions?
Yeah, so 9 of the last 10 deals that I've closed with the Stratton Group involve seller concessions.
That's incredible.
Yeah, it is, and it a lot of those transactions, I think 8 of the 10 were first-time home buyers.
Wow.
And so that's huge because the stress is, your ideal. People ask me, who's the ideal first-time home buyer, or who's the ideal candidate for a down payment assistance program? And the ideal candidate, Pete, is someone that can afford the payment, has strong job stability, and just lacks cash to get into a home.
Get into the house.
Yeah, and so when you guys are negotiating on behalf of the buyer, and you're getting those seller concessions negotiated on their behalf, it's huge, because at the end of the day, that means they're coming in, with $8,000 to $10,000 less than what they would have come in without those concessions.
So as a buyer, I can come in with 0% down.
Yes.
You get a good agent, they can negotiate seller concessions. Those can go towards paying the closing costs that I would have had to come out of pocket with cash from.
Yep.
Or buy down a rate.
Correct. And it's the funny, I remember back to when I bought my first home and being so skeptical. I didn't use a down payment assistance program. I heard about them, but I was skeptical. I am confident when I talk to home buyers today, this really is the sweet spot for first-time home buyers, especially because, again, nationwide, as of May of 2026, nationwide, 46% of transactions involve seller concessions. Now, here in Arizona specifically, it's higher than that. And so, yeah, to your point, I think 7 of the 10 deals we closed together, our buyers came in with no cash.
That's crazy. Yeah, I think I think there's just always been this belief that if I want to buy a house, I have to have 20% down to do that.
Yeah.
And I have to have a 700 FICO score. And, we've just turned into a buyer's market where, companies like Mutual of Omaha have come up with programs to help people that have got a little banged up with their credit.
Sure.
Give them an opportunity to get into home ownership, start working on their credit over a long period of time, and get that to the right place for themselves. And they don't need 20%. In fact, you can come in with 0% down.
Absolutely. In this market. And I understand it's, the markets, you read the media, you read the press clippings, and people are skeptical. I've been there, right?
Yep.
But I'll tell you, in this market, it truly is a buyer's market, and I'm seeing it firsthand.
Yeah, and I think, if you look back even just a couple years, you go back to mid-2022, interest rates were 3-4%, that kind of thing.
Sure.
Right? But the issue is the average days on market for a house was single digit. It was under 10 days, right?
Right.
So now it's hyper competitive.
Correct.
Sellers know that they can ask a premium or over asking price.
Right.
Put the buyers into a bidding war.
Right.
And even though you're getting it 3.5, you're overpaying for the house.
Right.
And so the average sales price of a house is cooled 1.5% in the Tucson market. But now you've got 71 days on market up north, and you've got 56 down here. So you've got time to breathe and go out and look at a house, make an offer, and you're not competing with 10 or 15 or 20 people for the same house, right? So it puts the negotiating power back on the buy side. And if you've got a great agent that can go get some of those concessions, negotiate those out, and then come in with a great lender partner, you're in a really good place.
Yeah, and that's the key piece. The key piece is working with a tenured group, with good agents like the Stratton Group, because that's critical, right? It truly is teamwork, right?
Yep.
We're taking care of the down payment, we're taking care of the loan side, but you guys continue to show time after time, especially over the last year that we partnered together, that you really take care of your clients, especially on the buy side, and getting a lot of these first-time home buyers into homes with zero money down.
So I know one of the other things that's come up too is one of the things that you guys do exceedingly well is your closing times.
Sure.
What's an average closing time for you guys, or what's the quickest you guys could close out a loan if you had docs and everything in order?
Sure. Yeah. I mean, I think we did a deal together. We closed the loan in, 10
days?
calendar days? Yeah.
I think.
Yeah. It was a conventional loan, but 10 calendar days we closed it. Yeah.
Yep. Pretty well covered, first-time home buyers, but we've got other buyers out in the market, whether that be a veteran, physicians, you got a physician program, luxury, conventional programs. Let's break these down here just a little bit. So let's talk about what is the physician's program and why is it beneficial? Maybe I'm a young student coming out of medical school and I'm just finishing up my residency and I'd love to buy a home. And I've got a lot of challenges around doing that. Walk them through kind of your guys' physicians program to help them get into home ownership.
Yeah. I've done one loan, excuse me, in the last 60 days with the team where it was our physician's loan. So the physician's loan, and the advantage with our in-house physician's loan that we can do is, to your point, a lot of these medical professionals are fresh out of medical dental school, right? And student loans are a concern, right?
Huge.
Not just for them, but for the entire country right now, right?
Yeah.
And so, medical school is not cheap. And so what's preventing them from qualifying as they're going into their residency is, you could have anywhere from $200,000 to $500,000 in student loans. While they're going through their residency, they're not earning the income. There's income potential there, and we know it's going to be there. But those first couple years that they're in residency, income's limited. And so the physicians program does a couple things for them. If they're in their residency and they have student loan debt, we exclude that student loan debt and those monthly payments from their qualifying debt to income ratios, which is huge, right?
Yeah.
The other thing too is we can go up to 100% financing with these physicians loans,
Wow.
meaning no down payment required. The other key point is with most loans, right? You need to put 20% down or more to not have mortgage insurance. Part of your monthly payment is mortgage insurance that banks will charge you if putting less than 20% down. With our physician's loan, there's no mortgage insurance in that, monthly payment, whether it's 20% down or 100% financing.
Which could be hundreds of dollars a month.
Absolutely.
in lowering the monthly payment.
Absolutely.
So between excluding their student loans and the income to debt ratio on that, and on the front side, and then eliminating mortgage insurance on the back side,
Right.
it opens up that buying spot
Sure.
for the physician.
Right. And if you want to hold on to that cash, right, that liquid cash, because they're just entering their careers and moving here probably from another state or city, which we see often,
Right.
100% financing, no down payment required.
That's fantastic.
It is.
Great program.
Yeah.
So everybody's heard of the silver tsunami, right?
Yeah.
And so how does that play in? I think a lot of people think that, I'm not a silver tsunami. A silver tsunami? Is that a word? Yeah, I'm not one of those yet, but I'm close. I'm close, right? But I think a lot of people think that, if I'm older, I'm in that age range. I've been living in my home. We've raised our kids. And we now have this big house. We want to downsize and we want to buy. I think everybody always thinks, well, if I sell my house, I can need to take that and use it as, pay all cash for the downsize. And that's not necessarily the case.
No, absolutely not. It's funny you mentioned that, Pete, because, I think the stat is about 10,000 Americans will turn 65 every day through 2030, right?
Isn't that crazy?
It's wild, right? But we've been hearing about this, and it's coming, and it's happening now, and we're seeing it. And so, yeah, I talk to a lot of clients that are looking to downsize and putting their home on the market, wherever they're living as they're getting ready to retire, right? Pre-retirees, but they're prepping for it. And so they're talking to real estate agents in their market and looking to list and move out. A lot of them are moving out west, right, for the weather. And so, yeah, the key is, they're going from a certain income to now a fixed income and trying to adjust to that new lifestyle, right? And so, yeah, the big thing is cash liquidity and holding on to that cash, right? When they're selling their home that they've owned for 30 years that has a ton of equity, or if they've, saved over the years. But yeah, I'll tell you, the big thing is we definitely have options through Mutual of Omaha. A big one is, people worry that now that they're going to be on fixed income, that they won't qualify, which isn't the case. For those that have IRAs, 401ks, we can do what's called an asset depletion loan, and we can use their assets that they've built over the last, 30, 45 years to qualify them for a new mortgage without having to put, 50, 75% down.
Right.
Which is huge.
So I would say, and every one of those situations is unique, right?
Sure.
So, if you're in a place where you're thinking about selling a home, whether that's locally and then downsizing into something else, or you live somewhere else and selling a home and moving to the Southwest, and you want to figure out how to protect that cash out of that home, give Rolando a call and have a conversation and let him walk through kind of what you got. There's a lot of options that are available there for folks.
Yeah, and that's the key word, right? Something that I take great pride in, whether it's a first-time home buyer or someone that's retiring, we will give you options and we will give you peace of mind.
Yep.
Because someone that is retiring, right? It's they have there's still some stress out there when it comes to selling their home and buying out here.
A lot of memories.
Sure. And
relocation.
There's a lot of mixed emotions, and our job is to put them at peace of mind and have them be confident when buying their new home and their next forever home, right? And so there's definitely options out there, Pete, and that's something that we take pride in, and that's my job, is to provide options. And ultimately it's up to them, but the options will be presented, and I'm confident that those clients will make the best. They'll make the best decision for them and their family.
Love it. So I know one category that I wanted to touch on today for sure is VA. Veterans. I happen to be one, and I've used my VA. You're welcome. Yeah, and I've used my VA loan before, and I think there's a lot of misnomers around. If I use my VA loan to buy a house and I'm a veteran, and then I sell it and I want to buy another house, I can't ever use my VA loan again.
Sure.
Those kind of things, and some of the benefits of a VA loan versus a conventional or an FHA loan.
Sure.
Let's kind of unpack that a little bit and maybe just kind of walk through some of the benefits of a VA loan. If you're a veteran and you've never used that, or you're not quite sure of your eligibility, give Rolando a call and walk through that, because there's a lot of misnomers around that.
Absolutely. So a common misconception is the first one you mentioned. I have a client now out of Nevada that owns a home, and they use their VA benefits, and you guys connected me with them. And he didn't realize, which is surprising, because he's used his VA loan before, but there's what's called bonus entitlement. Mm-hmm. And so he can hold on to his current home. He's going to keep it as an investment property. He's moving out to Arizona, but he has what's called bonus entitlement. And so he didn't realize that, he still qualifies for a VA loan with zero down payment. That client now is moving out to Arizona, and he's under contract. And we're using his bonus entitlement, no down payment,
right?
Just like when he bought his first home, no mortgage insurance.
Huge.
That's huge, right?
Huge.
And listen, obviously you served. I always tell, our veterans or active duty, it's the least that we can do for you guys, right? That's one of the perks of a VA loan. And so no mortgage insurance, no down payment required, which is huge, right?
Yep. And getting the VA, what does that look like as far as underwriting a VA client versus somebody FHA or VA? Is there a big difference between those?
Sure. Well, I'll tell you, with the VA loan, it's similar to an FHA loan. They're a little bit more forgiving on the credit score and qualifying someone if someone's had some hiccups, which is huge. Debt to income ratios, there's more flexibility there versus a conventional loan. And what I love about a VA loan is underwriters and banks look at what's called residual income as well. And so if your debt to income ratios, on the higher side, a lot of clients are concerned about that. But if your residual income is strong, and that's something that we look at, that's a workaround, and that's how veterans and active duty military personnel are still getting approved for home loans.
And the other misconception I've heard before too is if I'm a veteran, I can't buy a house above $250,000 or $300,000.
No, yeah, if you haven't used your benefits and you're buying for the first time, really, depending on where you're buying, there's what's called conforming loan limits, right?
Yep.
But that is a myth. Now, for someone like you or my current client that's using bonus entitlement, that's holding on to that primary home they currently own and getting into bonus entitlement, there is a calculation. If you go, past a certain amount as far as the sales price, then you may need to come in with a small down payment. But, that's where I love talking to clients. Again, it's all about providing options, giving them knowledge. My client that's moving here from Nevada, that's where we started. And I helped him understand bonus entitlement, what the max sales price that he could go up to before he would have to come in with the down payment.
Cash.
And once he saw that, he laughed and because he wasn't thinking of going north of that price that I gave him. So he felt at ease. He started shopping with your team immediately, and we were under contract within, I think, a week. So
wow, fantastic. Well, I think we've done a pretty good job unpacking some of the myths around the different loan programs and what's going on and what's available to the consumers. But I think the one thing I want to go back and make sure people understand is that every situation and every client is unique.
Sure.
Right. And so if you're thinking about buying, whether you're a first-time home buyer, conventional buyer, VA buyer, jumbo loan, luxury home above $1 million, give Rolando a call, walk through the scenarios and the different options, and just see what's available to you.
Sure.
Yeah.
Yeah, I mean, I think that's one thing I take great pride in, Pete, is educating my clients. Even if they decide not to use me, if they walk away and they walk away with a little bit of knowledge, right, and they feel more comfortable about the home buying process, whether it's a first-time home buyer or someone buying their second or third home, you know, as long as I can provide some kind of knowledge and they're walking away with that, you know, I feel like my job's been done.
Yeah. And, you know, I want to go back one more time and just say we're in the best buyer's market that we have been
Oh yeah,
in years and years and years and years.
without a doubt.
And it's not all just about interest rate. It's
No.
about being able to negotiate concessions, timelines. Maybe you're trying to time out a move out and a move in,
Yep.
you know, and getting a great loan partner that's got great alternatives.
Yeah, yeah. No, it's to me, like I said before, it's the sweetest spot for a home buyer right now. This market,
bet.
it's great.
If you're thinking about buying a home, give us a call. We would love to work with you. Stratton Real Estate Group, whether that's in Tucson, Phoenix, Prescott, Northern Arizona, or in Las Vegas. And if you're looking to get qualified for a loan and see what you're able to buy, give Rolando a call. Work through it. He'll help you figure it out.
Absolutely. Thanks, Pete.
Have a great day, buddy.
You too.